Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about SKYWORTH Group Limited Annual Report. SKYWORTH Group Limited is a leading consumer electronics company that operates globally across various segments. The company's business portfolio includes the manufacture and sale of smart household appliances such as smart TVs, air conditioners, refrigerators, washing machines, kitchen appliances, and personal care products. They also provide internet value-added services. In addition to household appliances, SKYWORTH Group Limited offers a range of electronic products through its Smart Systems Technology business segment. These include home access systems, set-top boxes, broadband network access equipment, XR/AI glasses, automotive display integration systems, industrial control display modules, Internet of Things products, and intelligent manufacturing solutions. The company's new energy business segment focuses on the sale and installation of distributed photovoltaic power stations for residential and commercial use. This segment aims to provide clean energy solutions to customers. Furthermore, SKYWORTH Group Limited offers a variety of services through its Modern Services Business and Others segment. These include property leasing and sales, loan financing, trading of other products, maintenance and repair services for home appliances, macrologistics services, construction development, financial leasing, and property operation for industrial parks. The company also engages in the sale and distribution of reception facilities for digital televisions, develops and holds properties, manages its treasury, and provides advertising services through its online platform. With a history dating back to 1988, SKYWORTH Group Limited has established itself as a prominent player in the consumer electronics industry. SKYWORTH Group Limited market capitalization of $12 billion is significantly larger than the average industry peer of roughly $1 billion. This shows that SKYWORTH Group Limited holds a significant advantage in their industry. SKYWORTH Group Limited trades at a higher price-to-earnings ratio of 31 times and a lower price-to-book ratio of 0.56 times relative within the industry. But when we look at the broader industry, much for its peers are also priced fairly or higher. This indicates an overall sector-level optimism, suggesting that investors are already valuing the industry with a forward premium for the industry, leaving limited opportunity to uncover undervalued stocks. The leverage on the balance sheet appears elevated, with liabilities of 67% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The company has aggressively reduced its share count by more than 5%, while revenue, profits, and assets have grown. This represents a very favorable capital allocation strategy, with management materially increasing per-share value. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth for the company can be attributed to several key factors. Firstly, sales of goods have increased by 8.7%, driven by strong demand for smart household appliances and modern services. The smart household appliances business has seen a significant boost in revenue, with a growth rate of 6.3% and 6.5% respectively. Additionally, the company's expansion into overseas markets, particularly in Southeast Asia and Europe, has contributed to a 16.3% increase in revenue from these regions. The company's focus on innovation and product differentiation has also played a crucial role in driving growth. The launch of new products with advanced features, such as AI-driven innovations and ultra-high audio and video standards, has resonated well with customers. Furthermore, the strategic expansion into the smart personal care segment has shown promising results, driven by premiumization, youth-oriented design, and smart innovation. On the other hand, the primary drivers of revenue decline can be attributed to a few key factors. Leases have seen a decline of 8.2%, while interest under effective interest method has decreased by 100%. The new energy business has also experienced a decline of 7.4% in revenue. Additionally, the modern services business has recorded a decrease of 8.5% in revenue, mainly due to a decline in the mainland China market and overseas markets. It is worth noting that while these factors have contributed to revenue growth or decline, they are not exhaustive and may be influenced by other external and internal factors. The net income of the company remained unchanged, but a closer look at its financials reveals a possible decrease in net income. This is indicated by a decline in net current assets, suggesting that the company's revenue may not be keeping pace with its expenses. A more tangible change can be seen in the company's profit margins. Specifically, gross profit margins decreased by 0.7 percentage points to 12.8% in 2025, compared to 13.5% in the previous year. This decline is attributed to several factors. Firstly, the modern services business has narrower profit margins compared to other sectors. Additionally, increased raw material costs have put pressure on the company's bottom line. Global supply chain tensions and U.S. tariff policies have driven up these costs, eating into the company's profits. Furthermore, the introduction of a new energy business has diluted the company's overall profitability. This new venture has lower margins compared to the traditional household appliances business, contributing to the decline in profit margins. Overall, the combination of these factors has led to a decrease in gross profit margins, which may have a ripple effect on the company's net income. The company's financial performance indicates a positive trend in its operating cash flow. According to page 7, it is explicitly stated that operating cash flow, positive, providing clear evidence of this assertion. Furthermore, on page 30, although not directly stated, the information suggests that the company is indeed generating positive operating cash flow. This inference is based on the data provided, which supports the conclusion that the company's operating cash flow is a positive aspect of its financial performance. The company's debt level has undergone significant changes over the past year. According to the extracted summaries, total bank borrowings and other interest-bearing financial liabilities increased from RMB 16,383 million in 2024 to RMB 19,511 million in 2025. This represents a notable rise of RMB 3,128 million, indicating that the company has taken on more debt. In contrast, interest expenses have actually decreased. The summaries show that interest expenses dropped from 473 in 2024 to 416 in 2025, which is a reduction of 57. However, it's worth noting that there was no explicit mention of interest expenses on page 31, and the decrease in net exchange gain may be related to other factors. Nonetheless, the overall trend suggests that the company has managed to reduce its interest expenses despite taking on more debt. The company's performance varied across different segments and regions. In terms of segments, the smart household appliances business stood out as a top performer, with a revenue growth of plus 6.7%. The modern services business also showed promise. Despite not meeting quantitative thresholds, it was mentioned to be performing well in certain areas. On the other hand, the smart systems technology business and new energy business and others struggled, with revenue decreases of -0.3% and -8.2%, respectively. The construction development business within the modern services business sector was particularly affected by China's real estate market downturn. In contrast, the new energy business showed increasing results, indicating a positive trend. Regionally, mainland China market saw a growth in revenue of plus 5.5%, while overseas markets experienced an impressive plus 16.3% increase compared to the previous year. Management is maintaining a cautious approach due to external factors such as foreign exchange rate fluctuations and evolving interest rates. Despite this, the company remains committed to its strategic goals. One key area of focus is investing in business partners to build a smart household platform, leveraging technology and content services. In addition to this, management plans to review and adapt its investment portfolio to mitigate risks. The company will also invest in properties, plants, equipment, and improve operational efficiency to drive growth. This strategic approach aims to position the company for future success through a diversified and internationalized business model. The company's financial activities have been transparent in their annual reports. On page 7 of the report, it is clearly stated that the company has paid dividends to its shareholders. The exact amounts for 2025 and 2024 are specified, indicating a commitment to rewarding investors through dividend payments. In addition to paying dividends, the company has also engaged in share buybacks. Again, as mentioned on page 7 of the report, specific repurchase amounts for 2025 and 2024 are provided. This suggests that the company is actively managing its capital structure by reducing the number of outstanding shares through buyback programs. That concludes the financial summary for SKYWORTH Group Limited. Feel free to comment below, and I will be happy to answer them when possible.